Hi, this is Greg Anderson. I'm the broker at RE/MAX Advisors West. I want to talk today about taxes, kind of the tuition of getting to live in a particular area, property taxes specifically. We've been having a lot of issues in our area, in Chaska here, where we've been rebuilding a lot of the infrastructure. They've been tearing up streets, putting in new curbs, gutters, sidewalks, sewer, water lines, and you're going to see that more and more throughout the metropolitan area. You know, the old joke in real estate is that Rome wasn't built in a day, but Ridgefield was. So they've got a Ridgefield, St. Louis Park, Golden Valley, Bloomington. You've got a lot of aging infrastructure. Downtown Chaska also happens to be a little bit older, and so they're in the process of redoing it, which lends itself to how does this stuff get paid for. And the way that it happens is it's called a special assessment. It's an addition to the regular property taxes. So you have your actual property tax that you have for your property, which is basically a formula. We're going to do another whole video on property tax and how that's calculated. But for now, you've got your base property tax. And let's say that the capital improvement was $100,000 and there's 10 homes on the street. That's $10,000 per house. It gets tacked on. They either knock on your door, you can either write a check for it, which nobody wants to do, or they'll add it onto the taxes and finance it either 10, 12, 15 years, depending on the size of it. Some of the assessments in Chaska have been fairly significant because you're talking about tearing up the road, water, sewer, curb, gutter, new sidewalks, new curb cuts for the driveways, and so those things can get kind of spendy, and so they'll finance that out over a longer period of time. The dilemma that we're running into is the expectation that the seller would automatically pay that on a purchase agreement. So we're getting offers and the buyers are asking that the specials be paid. And so some of the pushback has been, what type of assessments are these? And the way that the large lending institutions look at it, the corporate clients, the Fannie Mae's, Freddie Mac's, HUD's, the large banks and things, they look at them two ways. They talk about beneficial assessments and punitive assessments. A punitive assessment would be like an unpaid water bill. If the grass, if the house was abandoned and the grass got, 2 feet tall and the city came out and mowed it, they would tack the cost of that onto the assessments. There's typically no pushback in terms of getting a seller to pay those at the time of the closing. The beneficial assessments, the argument is the buyer is getting the benefit of this new road, this new sidewalk, therefore they should assume the payments from that point going forward. So if it's a 3-year-old assessment, it's a 10-year loan, they would assume the remaining 7 years on the balance of that assessment. It's something that we're getting, there's pushback both sides and there's a reasonable case to be made, but it is something to be aware of when you're looking at either selling your home with assessments, or if you're looking at buying a home in an area that's either has capital improvements that have been recently done, or for example with like Ridgefield, St. Louis Park, Golden Valley, where you know that it's coming, and just kind of being aware of it. As always, if you've got additional questions, you want to drill down in this a little bit more, call me, send me an email. Thanks for watching. Have an awesome day.